Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike York. Today is Tuesday, May 24th. And, the economic news release just won new home sales and went up a tick about 323,000 compared to the 300,000 the previous month. Kind of expected to go down a little bit, but, we are entering the summer month, so it should be expected that we should have a little bit of growth over the summer as most people are kind of looking for homes during that period as they don't want to move their children while school's still in session. So typically, seasonal, summer's busier anyways. Some different news, headline news that were out were yesterday, actually, James Bullard, Fed member, made comments saying that the Fed's going to probably most likely hold off on any interest rate hikes come after quantitative easing ends in June. As I kind of mentioned in some previous posts, that the Fed's probably going to hold off, most likely due to they want to see where the economic turns, and sometimes it takes a few months for things to kind of kick in. Now, quantitative easing 2 had kind of weakened the dollar because it's basically giving the government free access to print more money. So it kind of weakened the dollar. As a result of the weaker dollar, we've seen oil prices skyrocketed. So with the quantitative easing ending in 2, in theory, what they're looking at is see if the dollar gets stronger, therefore oil prices get weaker, and so some of volatile energy and food prices hopefully weaken down, and then also see weaker inflationary numbers come fall. So that's what they're going to be kind of looking towards. The economy is still not moving. They still need the lower rates to kind of help drive the economy a little bit. So that's why they're not too anxious to move it. But obviously they want to keep inflation in check. So you're going to see some of that probably come late summer, early fall, to see where things go, and then maybe they'll keep see if the economy is moving forward, or some things are kind of pointing for maybe double dip here as well. So some things to watch out for over the next few months. Also, there's been talk because of quantitative easing that the stock market may have a correction. It's been going up practically 24 months straight. And, right now, basically, it's kind of like this big elephant that's going up a steep hill. Finally, it's kind of tiring a little bit, and it looks like it could be kind of working its way downwards. So that could be something that happened. These happen, corrections, as we had kind of a bond correction kind of earlier on, but there's also kind of government interference falling in there. So right now the stock market's down a little bit across the board. It was a little bit steeper and it's kind of pulled back a little bit. With that in mind, let's go ahead and take a look here at the bond market and see where interest rates are heading. So here we got the bond market, and as I kind of mentioned in yesterday's post, we had a nice jump up opening gap, pretty large one, about I forget, it was like 22 basis points. And actually, this should be 4%. My apologies here. This keeps moving on me. 4%, but kind of similar calendar what it looks like. So let's take a look here at the 4%. This is where interest rates or mortgage rates are kind of are more comparable to the 4% coupon. So we started way up here. We even went up a little bit, but we bounced downwards. So we closed that opening gap, which is a good thing because we had that more of a solid foundation. As we can kind of see, we're kind of developing this straight line here, solid foundation. Now this could create a nice floor for us when we actually make a bounce upwards, or it could work the adverse effect where it could create a ceiling for us. So if the GDP numbers come out really good, this could become a ceiling. We could drop downwards as there will be optimism with the economy. If it comes out really bad, it could go the adverse and go upwards and create a nice ceiling floor and kind of blow through the one, which has been kind of the par 50. It's been kind of the head mark here for us, kind of resistance here. So, but today we actually had an opening gap to the worsening, but now we're up about 22 basis points. We opened, we closed up 100, par 13, and now we're at par 22 right now. So right now rates are was probably open a little bit worse, or about the same as it was yesterday, and we should, if it continues, we could have an intraday price for the better today. So assuming this continues upwards. All right, folks, you guys have a great day, and catch you tomorrow. And folks, I'm also a loan officer. If you're looking for a mortgage in the state of California, I can also help assist you. You can check out my other websites here at obviously at Mike's Daily Market Report and MikeYork.com.
even CaliforniaMortgageTips.com and the Mike's HomeBuyerUniversity.com. I have some great resources there. But feel free to give me a call at 310-694-3544. I can do refinances, and I also do purchases. So I can help you get pre-approved to buy that next home here. So thank you, and keep me in mind.